What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is February 23rd, 2022. What a beautiful day in the markets. Now, today was another bloodbath. We actually broke below the January lows and closed below them. So this video, it might be a little bit longer than most. We're going to talk about the price action, the indices. We're going to talk about my trades for the day. And we're also just going to talk about this correction just in totality and really just put things into context. Before we do that, quick disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, so box scores. S&P 500 finished down 1.75%. Nasdaq QQQ finished down 2.56%. IWM small caps finished down 1.9%. Dow Jones finished down 1.35%. And the ARK Innovation ETF finished down 3.96%. All of these indices pretty much closed smack dab on the low of the day. They were all in the bottom decile of their daily range. And the volatility increased for all of these indices. Breadth was a complete washout. There were no indices where we had, over 16% advancers. So this really was a washout day in the markets. Let's take a look at our heat map, and we can see more evidence of that. We've been in this corrective sequence in the market. Let's be honest. It officially showed up in the headline indices beginning in January, but we've been in a stealth bear market and stealth correction since February of 2021. And I think the market did a fantastic job of really sniffing out the Federal Reserve having to ease up or tighten up on its monetary policy. And very systematically, the market went through each and every one of these sectors that benefited most from the high liquidity environment and started taking them all to the woodshed. Now in 2022, we're finally starting to see it appear in the headline indices because we're finally seeing the weakness in the FANG stocks. And I mention this quite often, but Apple and Microsoft each make up about 6.5% of the S&P 500. So to be honest, it's really just like, okay, the sell-off finally made it to Microsoft and Apple. That's really it. But this is certainly not like the beginning of the corrective sequence. This feels like we're starting to climax. You can see Nvidia was down 4.29%, Tesla was down 7%, Amazon over 3.5%. So just a lot of carnage out there. I run a screen every single day, and I share this with Pristine Capital members of all the stocks that are liquid and in uptrends. And pretty much throughout the entirety of 2022 so far, it's just been energy and financials, and now even those groups are starting to come under fire. So yeah, overall, just some major weakness after a nice gap up in the market. Sectors, we had gold miners trading positive. We also had energy positive, but other than that, it was, again, just a bloodbath. We had biotech down over 4% in a single day. That's huge. All of the ARK Innovation ETFs were down big as well. And you can see like MSOS was down, the Canvas ETF. There really were no safe havens other than those two groups. Style factors, we had the high beta style factor down 2.3%, growth style factor down 2.44%, momentum down over 2 as well. So really just a bloodbath. And take a look at the seasonality. So I actually have to shift this line over a bit. But the seasonality at the end of February is horrible. It's some of the worst seasonality of the entire year. And then in March, does it really get much better? Not until the end of the month. So granted, we're approaching the end of February. This really is like the final week. And then we finally make it into March. But yeah, we are really living up to this weak seasonality. All right, let's take a look here. I'm going to pull up, let's go to our chart here. Let me pull this over. So these are our headline indices. The S&P 500, take a look at this. So when we hit these capitulation lows in January, and we just had a very sharp correction. Like this almost looks like a parabolic move, but in reverse, like a parabola to the downside where you're just going poof, straight down in a line. And we did that, we got a nice bounce. But once this Ukraine and Russia news came into the picture, the market really started to falter. And you can see we've actually retested those lows from January. And I have these two lines drawn on my chart. And these were the lows from the prior like 2 or so days of price action. And you can see we actually crossed below those lows today and we cascaded below them. Now we're below this monthly value area, and my trend model actually flipped from -3 to -1 today. So that is the one incremental positive that I am seeing. But yeah, overall this technical picture, not the best look, as we can all see. The S&P 500 is down over 10% already year to date, and it is only February. So we've already seen a big move to the downside, and here's where things get interesting. So I talked about this earlier, but the old me, typically what I would do is it would be like, all right, we made a significant low. Hey, if we undercut that low and we close below it, that's where I'm going to stop out of all my positions, and that's where I call it a day, and maybe that's even where I get short the market. The reason why I do not do that anymore is because typically when you have a significant low like this, the market will undercut it. And what do all the technical traders do? As soon as we undercut and close below, they go, okay, that's my short signal, or that's my get out signal. So you have a lot of players that are stopping out, and you also have a lot of players that are entering fresh shorts. And this is day 1, 2, 3. This is day 4 of a bender of a sell-off. And if you're shorting this now, you're pretty much like, late compared to shorting at any point over the prior 3 days. So you have those dynamics, and for the institutions that actually want to add exposure, they can see, wow, all these players are selling hand over fist. Once we cross this threshold, then we also have a lot of shorts that are offering up shares. So for any institution that actually wants to buy, they're just getting provided so much liquidity by those players, getting their stops hit, getting margin called, and or shorting the market. So what I've noticed in the past is a lot of times when the market bottoms, it'll first undercut a significant low, it'll have a very scary close, and then the following day is actually where it bottoms. So that remains yet to be seen if that's going to be the case this time. But this was actually an example from back in 2011. And this was from one of my weekend market analysis videos that I shared with Pristine Capital members. But let's look at this example, for instance, just so you can get a feel for what I'm talking about. So this was back in 2011, and the price pattern is kind of similar to what we're seeing now, where we have sort of like this H pattern, right? And we were actually carving out a low for much longer here and just going back and forth, oscillating. And look what happened here. Look at this red candle. So you might have said, hey, we made a low, over here, and over here. So hey, if we close below the prior 3 lows, that's my signal to get out of the market, right? Because that means the level didn't hold. That means we're going much lower. And look at what happened the following session. We gapped down, which if this happens tomorrow, this really would be the scariest scenario for most investors. So I think if the market's going to reverse, this is honestly the optimal scenario. You get a gap down, then everyone that was holding out on this close, they finally throw in the towel and they go, oh man, it's time to stop out. Let's do this. I need to be alleviated of this pain. And then those buyers step in and the market forms a bottom. See, I think just in terms of how this sell-off has occurred, we've had basically like a 2-month sell-off at this point in the headline indices. I don't really think now is the time to be tossing the towel in, but that remains to be seen. My trend model flipped from -3 to -1, so there's an incremental positive. Let's take a look at these other indices. The Nasdaq, also you can see, undercut this prior low. And yeah, when I see things like, let's look at some of these Nasdaq stocks. You see things like Tesla, washed out below the 200-day, 7% down, closed on the lows. Again, for most investors, hey, this is the time to get out, right? But is the time to get out now, or was the time to get out in November of this past year? You know, we've already been in this corrective sequence. This is, you know, really long drawn out correction. So that's really my point here, that it always helps to zoom out, because I think a lot of investors and traders, like, they're of the mindset like, oh man, this is just the beginning. Like, you know, it's all just starting. But yeah, these dynamics have been occurring for a while. And it's kind of crazy because with what the Federal Reserve is doing, they're pulling back on their QE program, the bond purchases every month. And what is so nuts is by March 11th, they're going to be done with their QE purchases. So their balance sheet should stay the same exact size. And the market has already priced into the yield curve about 6 rate hikes. So oddly enough, I think a lot of investors, they're like, well, the Fed hasn't even started tightening. One, they have been tightening. Their bond purchases have decreased significantly over the past couple of months. So we're already seeing the lessened liquidity. And then in terms of the rate hikes are already priced into the yield curve. So those, you know, the Federal Reserve actually raising the Fed funds rate, it's more of just like a formality. They're already priced in. So I think you can get into a pickle if you're like, oh, you know, all that monetary tightening, like, that hasn't even happened yet. Like, I think the reality is the market has done a great job of discounting all of it. Like, the market has already killed a lot of these areas that are going to be the most impacted by the reduced liquidity. So for example, this ARK Innovation ETF, this is the monthly chart of the ARK Innovation ETF. It just smooths out a lot of the candles, and you can really see the big picture here. So look at this. The pre-COVID high was right around this $60 mark. And look, we've completely erased all of the COVID gains in the ARK Innovation ETF. And remember, this really was like the poster child for like the stock market bubble. And all these stocks, like, look, they went parabolic. But we've completely erased those gains. So now we're back to where we were before the lockdown and before we moved into this new world of, you know, telecommunications and telemedicine and, you know, cloud software really accelerating, like all those different things, like work from home, whatever. And we're trading back where we were before any of those things had accelerated. So yeah, I really think like this bubble, it is popped. Like the bubble already popped. Here we are. And I think this really is like the climax move or the aftermath of the bubble popping. And I think this is really like the prime example. And I know basically the way the market works is like up at these highs, and this is just human nature, right? So up here at these highs, everyone you talk to would say, oh my gosh, this ARK Innovation ETF, this thing is such an amazing buy. You have to buy it. And then of course, as we hit these lows, like down here, people would say, you cannot buy ARK, it's in a bubble. And it's funny because when you look at it, back here it was in a bubble. Here, in my opinion, it's no longer in a bubble. The bubble popped. And we're seeing that in a lot of these individual names as well. Like, take a look. These are the after hours movers today. And a couple of these names reported earnings. But like this company, Lemonade, this was, I remember, an insurance company that for whatever reason was trading as if it was a tech stock. Look at Lemonade. And look at this 5.9 as well. Take a look at Lemonade. Let me just go to the daily chart. So Lemonade. This stock went from, oh my gosh, let me go to the weekly for this one as well. Yeah, so we went from a peak of around like $185 for an insurance company all the way down to 22. And I believe in the after hours, this thing is trading down at like $18 now or something. So yeah, this bubble, is it like a bubble that's bursting, or is it a bubble that's popped? Like, this to me really just looks like we're seeing like the final capitulation moves. Because they, like, if this, I don't even know if Lemonade's a good company. Let's say it is. But it's just like a good insurance company. Like, there was no reason for it to be pie in the sky up here. Most likely, the people that are selling it after the earnings report today, they don't want to be selling it, right? Like, it's most likely capitulation. So you'll notice, like, these stocks, they're starting to move very fast, right? Like Tesla today, down 7%. 7% move is huge. That typically is not like, oh, the beginning of a sell-off. That's like all the fundamental reasons to sell it off likely were already in the past. And this is really just people that are so down on their position that just due to like margin calls or due to, you know, not wanting their clients to see that they're along this, etc. Like, that's the leg of this sell-off that I believe we're in right now. So yeah, just wanted to put everything into context in that sense. So here we are. Let's fast forward to where we are now. So we have the Nasdaq. We just undercut these lows, and it feels like the world is ending, right? But I will say is, hey, the market has gone through a legitimate correction now. The S&P 500 is down over 10%. The Nasdaq, let's see how far the Nasdaq is down year to date. This one, and I believe this is not going to include the 2.56% from today. Yeah, so we're down about like 17.58% year to date on the Nasdaq. So I know now it might seem like, oh man, there's no way I can be long like any stocks or like anything. But I think this is where, like I mentioned this earlier in our group, I think the window of opportunity is really just flinging itself open. And again, it depends what kind of investor or trader you are. Right now I'm carrying a cash balance, and I'm pretty excited to really just deploy that, because I think, especially like if you're of a longer term mindset, I would not let anyone fool you into thinking like, oh, now is when all the risk is here. Like, the risk was getting long these things a year ago, or, you know, a couple months ago. I mean, look at PayPal, for instance. This is another just like tragedy stock. Look at this thing. It was up at $310. Now it's down at $100.72. So another one that got cut by like 2/3. So this really reminds me, not like this is the COVID crash, because it's not, but it reminds me pretty similar of it, where I remember when the COVID crash happened, everyone was so afraid to buy stocks. It was like, no way, you can't be long. These things are horrible. And sure enough, like a few months after the COVID bottom, you look back at the chart and you're like, man, I wish I had bought some Apple back when it got killed, or man, I wish I bought some Shopify, or man, I wish I bought some of this company. And my mind is telling me that's probably going to be the case here, where like some of these growth stocks especially, or some of these cryptocurrencies, or some of just these companies that are really changing the world, I think now they're starting to get really beaten up. Of course, you don't want to be just like catching the falling knife, especially if you're a trader. But I just am trying to open my mind to the fact that, hey, I think there's some opportunity that lies ahead of us. And this is really for everyone that's getting discouraged, because it definitely is discouraging. Like when you're stepping into the market every day and it's just like relentless selling, right? Like it's tough, where you're just like, man, like we can't catch a break, whatever. But yeah, this relentless selling, it does not last forever. So really my point is, there will be another uptrend. So even if you're like, man, like this is horrible, like all these stocks are down, you know, there will always be another uptrend after this. It's not like the stock market is just going to close and it's all over from here. All right, let's take a look. We will check out some of my trades for today. And again, I've been keeping my trading volume pretty light, but today I was going after some opportunities as I saw this market get to these pretty oversold levels. So I did trade some MP, and it was really just like a scalp trade that I held overnight. Closed it out for 460. I paid 440, so a little mini base hit. I got long some SPY March calls in the afternoon, and I put these on as like a shorter term swing. And then when the market really started to waterfall, I got long some Qs calls. So we'll see. This is really just playing into that thesis that I've been outlining for you, that hey, the bottom might not be today, might not be tomorrow, but things are definitely starting to look a little bit more attractive. All right, let's take a look here. We'll go to the options order flow. Again, I think a lot of it has to do with just like this Fed tightening, and also the fact that we have all this uncertainty now over Russia and Ukraine. To be honest, I kind of wonder, like, to what extent is this sell-off really related to Russia and Ukraine? And is it really just more of like, hey, we all know the Fed's going to be tightening, so we're just getting out of Dodge while we can? Now you can see a lot of puts going up for this SPXW. Tesla, let's take a look. A lot of put activity going up. Shopify, all puts. Shopify is another one of these like casualty stocks. But look at what this one has done. Wow, did this one erase the COVID gains too? Yeah, so this one also has pretty much erased, or I guess maybe not completely, but yeah, it's basically erased all of the COVID gains. Let's take a look. So this is like the high from COVID. Yeah, we are getting so close. Shopify, I'm pretty sure this business has accelerated significantly from post-COVID. So that's what I mean. Like, we might look back on this and be like, geez, that was like the crazy buying opportunity in all of these growth names. So who knows? But yeah, for the most part, everyone now is buying puts on Shopify. So just imagine that. Like, now we're seeing the puts go up, and this thing has already been obliterated. Amazon, same thing, a lot of put activity. Microsoft, we're seeing that put activity as well. And let me, before we break for today's session, let's go to Microsoft and Apple, because again, these are two huge components within the S&P 500. So really, like, this S&P 500 correction, it's pretty much like, the way that I see it is like, this is just the Microsoft and Apple correction finally happening. So now, okay, we're finally getting an S&P 500 correction. But yeah, look at Microsoft. So we're below all these key moving averages, and we put in a huge red bar, and you can see we haven't undercut the intraday low from late January, but we just made a new closing low. Same thing for Apple. This has been the strongest stock in the market, and this one has not yet undercut the January lows, but also put in a big red bar. So if we want to see some strength in the overall market, we have to look to Apple and Microsoft to get that confirmation. But what I'm going to be doing over the coming weeks and months, because again, like, the market, I doubt it's going to bottom out like tomorrow. But yeah, this is more like, get ready over the next like couple weeks, couple months. Like, pretty much what I'm trying to say is like, now is not the time to be quitting. Like, now is when I think there's a lot of opportunities. So yeah, for the next couple weeks and months, like, it's going to be important to see like which of these growth stocks start coming off the bottom first. Like, Snapchat is a great example. I traded this one a couple weeks ago off the earnings report. This was one of my better trades of the year so far. But look at Snapchat, had a really nice reaction to the earnings. And of course, over the last couple of days, like, everything has just gotten demolished. But Snapchat really just pulled back to the 20-day moving average and actually closed green today. So maybe this is another example of where, hey, this stock, maybe it leads in the future as some of these come off the bottom. All right, guys, that about does it for today's market recap video. Hope you all enjoyed your trading session today, and I'll see you all tomorrow.